Warren Buffett, one of the most successful investors in the world, didn't start his journey with vast sums of money. In fact, he began with just $100. His remarkable journey from humble beginnings to billionaire status provides valuable lessons for anyone looking to build wealth. Buffett's love for money and investing began early. At the age of 11, he made his first investment by purchasing 3 shares of Citi Service Preferred at $38 per share. Although the stock initially dropped to $27, Buffett held on, eventually selling it at $40. However, the price later shot up to $200 per share. This early experience taught Buffett the importance of patience, a principle that would shape his entire investment philosophy. Buffett's first major step toward wealth creation was forming a partnership with family and friends in 1956. Using just $100 from his own savings and contributions from others, he started the Buffett Partnership Limited, which allowed him to use capital from investors to make his first major deals. Over the years, these partnerships proved immensely profitable, earning him a reputation for delivering outstanding returns. What made Buffett different was his focus on long-term value. While many investors are drawn to flashy stocks or short-term gains, Buffett focused on companies that had intrinsic value. He famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." He didn't chase trends, but rather sought out stable companies with strong business models that he believed would grow over time. One of the keys to Buffett's immense fortune was his deep understanding of the power of compounding. Buffett invested early and allowed his money to grow over decades. He recognized that time in the market is more important than timing the market. Compounding means that you not only earn returns on your initial investment, but also on the returns themselves, which leads to exponential growth. Buffett often emphasizes that compounding is the true secret behind his wealth. Many people underestimate the long-term impact of small, consistent investments. In the case of Buffett, this strategy turned a modest amount into billions. He often advises young investors to start early and remain consistent because, as he demonstrates, the earlier you start, the more time your money has to grow. Buffett's approach to investing is built around the concept of value investing, a strategy he learned from his mentor, Benjamin Graham, the author of The Intelligent Investor. Value investing means looking for stocks that are undervalued by the market. These are companies whose stock prices don't reflect their true worth, which could be due to temporary challenges or market ignorance. Buffett believes in buying these companies and holding on to them until the market realizes their true value. Berkshire Hathaway, the company that Buffett used to grow his wealth, initially began as a textile business. However, Buffett saw an opportunity to shift its focus toward acquiring insurance companies and other diverse businesses. Today, Berkshire Hathaway owns and holds significant shares in some of the most well-known companies in the world, including Coca-Cola, Apple, and American Express. These businesses provided Berkshire with consistent cash flow, allowing Buffett to reinvest and make even larger acquisitions. One of Buffett's most valuable traits as an investor is his patience. He once said, "The stock market is a device for transferring money from the impatient to the patient." While other investors panic during market crashes or economic downturns, Buffett remains calm. He views market declines as opportunities to buy good companies at a discount. Over time, this patience has paid off immensely. A great example of Buffett's patience is his long-term investment in Coca-Cola. He started investing in Coca-Cola in 1988, and despite the ups and downs of the stock market, he held on to his shares for decades. Today, his Coca-Cola investment is one of Berkshire Hathaway's most successful holdings. This long-term thinking is what sets Buffett apart from many other investors. Over the years, many have tried to replicate Buffett's success, but few have been able to match his consistent track record. What sets him apart is his ability to stay true to his principles, even when others are chasing quick profits. Buffett isn't swayed by market trends or the latest investment fads. Instead, he sticks to his core beliefs. Investing in businesses he understands, valuing long-term stability, and buying when others are fearful. His most famous quote, "Be fearful when others are greedy, and greedy when others are fearful," encapsulates his approach to investing. This means that when markets are booming, Buffett is cautious, but when markets crash, he sees opportunity. This contrarian mindset has served him well throughout his career. Buffett's journey holds valuable lessons. First, start investing as early as possible and take advantage of the power of compounding. Second, focus on long-term growth rather than short-term gains. Third, stay patient and don't panic during market downturns. And finally, diversify your investments to spread risk. Buffett's story also highlights the importance of financial discipline. Throughout his life, he's been known for his frugality, even as a billionaire. He still lives in the same modest home in Omaha that he bought decades ago. This frugal mindset has allowed him to focus on building wealth rather than spending it, a principle that anyone can apply to their own financial journey. Warren Buffett's rise from $100 to billions is an inspiring story of patience, discipline, and smart investing. His principles, value investing, patience, the power of compounding, and staying true to his beliefs, are lessons that anyone looking to build wealth can learn from. Whether you're just starting out or already have some investments under your belt, Buffett's journey provides a roadmap to long-term financial success. By understanding and applying these lessons, you too can begin your journey toward financial independence and wealth creation, just like Warren Buffett. Remember, it's not about how much you start with, but how you use what you have to grow over time.